macroeconomic fundamentals of the country, including the external sector, are very strong, very robust, very healthy. Whether you look at growth, inflation, whether you look at the current account on the external side, or you look at even the capital account side, I think near-term, medium-term outlook is very healthy, is very favorable. You are aware that the government has taken a series of measures to increase our external position. Number of bilateral as well as multilateral deals have been signed. EU, EFTA earlier, Oman earlier, UK, and now the prospective UK deal. All of these will help on the top of a very, very comfortable current account that was last year 0.6% of our GDP. First half only 0.8% of the GDP. On top of this, with all these deals, agreements, it should only further help. Not only on the current account, on the trade side, merchandise and services, but also on the investment side, because a lot of them have investment commitments. Like, for example, EFTA, I think, had $100 billion. New Zealand had $20 billion. On top of that, even on the investment side, the government has been very proactive. It has taken a number of measures. See, these are things, first of all, let's keep in mind, these are in the domain of the government. These are not, in our domain. These are in the domain of the government. The regulators are there primarily to facilitate whatever economic activity is going to happen, whether it is domestically or whether it is in the external sector. But I want to remind everyone that the government has been very proactive, both on current account as well as capital account. Latest example, on capital account being opening up of the insurance sector to 100% FDI. That will help. This year, we have witnessed record deals in the banking space and the NBFC space, about $15 billion, of announcements or FDI, already that has come in. And then a number of other measures that now the government is taking. I was very happy to see in the budget the tax holiday, for example, for data centers. That should bring in a lot of investments in our country. Safe harbor rules were in the works for some time. The safe harbor rules now for IT, I would like to draw attention to all of you and to your viewers. I think this has not perhaps gained, the attention that it deserves. It's a very big move towards tax certainty, simplicity, ease of doing business within our country. All these GCCs, that you see are being set up, they will vastly gain from, and these are only some of the measures, that I have mentioned to you. In the near term, in the medium term, we are, as mentioned even in the monetary policy statement, we are very confident of meeting our external sector responsibilities, whether it is on the current account. You are aware, 11 months, we mentioned 11 months of imports. That is imports. If you look at deficit, it is, my DG tells me, one should be looking at the deficits. Deficit is, if it is $10, $20 billion, let us say, so, we have sufficient reserves for many decades, not, 11 months of import, but many decades of deficit. Similarly, our short-term borrowings, debt, twice the reserves of our short-term borrowings, twice. So on the external side, we are very comfortable, and I did make a mention of that in my monetary policy statement.
If you like the video, do like, comment, share and subscribe.